Good morning, and thank you for joining us on True Potential's Morning Markets. Today we'll firstly look at how asset markets have performed and then come on and discuss some economic data. So firstly, just equity markets yesterday, a weaker day for equity markets across the globe. If we look at Europe and here in the UK, we had the Euro Stoxx 50, the FTSE 100 down around 2% over the course of the day. That follows on from the weaker performance that we saw in US markets on Monday, and that has just fed into how Europe performed yesterday. I think there's a couple of points just to highlight there. One, we did see those stocks that are more exposed to the cyclical recovery, the reopening of economies, falling further yesterday, so underperforming the broader market. We also, in the case of Europe, saw the financial sector impacted by an ECB report that discussed the lending intentions of the Eurozone's banks. And when we look into that and you dig into it, it seems that the banks are still reluctant to lend. They're still assessing their corporate customers, their consumer customers in terms of the impact of COVID-19. So lending rates have been relatively anemic. And that's a similar theme to that which we saw last week from the US banks as well, where loan growth was pretty anemic. So that was impacting Europe. I think just looking at the US as well, very similar sector make-up in terms of the moves yesterday. Continuation of the small mid-cap areas underperforming, financials underperforming just as they have performed strongly, but also just in terms of how the shape of the yield curve has altered over the past couple of days. I think it's also really important to keep it in context. Just cast our mind back a few days ago, we were talking about asset markets and equity markets in particular at all-time highs. It's a natural state to see a little bit of a pullback as participants reassess the moves that we've seen. I think the other thing to keep in mind is also that we're going through results season. That's coming thick and fast. There are going to be lots of idiosyncratic company-specific issues that will have to be dealt with and navigated through that. So we looked at the VIX yesterday. Volatility will no doubt move up a little bit over the coming days as we move our way through that. It's also important to note that first quarter 2021 is going to be one of the strongest earnings recoveries that we will see, given the year-on-year base effects that we've discussed. So that, again, is required, and any sort of guidance from companies that cast doubt on the sustainability of their growth will cause a little bit of indigestion in equity markets in particular. And just thinking about that in a little bit more detail, we had results from Netflix last night, which is just worth featuring in on because, yes, a good set of results in terms of year-on-year growth, but what did they discuss was just a real slowdown in their subscriber numbers, with their global subscribers coming in at 208 million versus 210 million expected, and that caused a bit of a reappraisal in the after-hours market, with that share falling around 8%. I think one of the comments that the management team made, I think, is quite instructive and interesting to reflect on, because it does speak to what we saw for a number of companies last year. And I'll just quote this back, and they said, "We believe paid membership growth slowed due to the big COVID-19 pull forward in 2020. So effectively, very, very strong subscriber growth last year that may have ex-COVID been a multi-year phenomena, but was pulled in very, very into a short period of time last year. And that's something just to bear in mind, and for market participants to bear in mind as we look at other companies reporting in the coming weeks as well. So with that sort of little bit of a pickup in volatility, it wasn't really surprising then to see bond markets come in a little bit over the course of the day. And then just looking to the day ahead, inflation has been a real key hot topic for us and the discussion in terms of what we've seen in various different geographies. It's the turn of the UK this morning to have their March inflation data coming through. And really at the sort of the headline level, no changes there in terms of, yes, there's a pickup from last month. So the headline inflation rate moves up to 0.7% from last month's 0.4%. Looking at that on a core basis, we're talking about inflation rate of about 1.1%. So really no change at that level. But the pickup, just digging in below it, probably evident to anyone that's filling up their car at the petrol station. It's all about petrol prices, the increase in petrol prices feeding into that year-on-year growth rate. The other bit just to note, as we've discussed in other inflation data prints, is the rising input costs for producers. Quite a notable pickup there, 1.3% month on month. So we'll see how that feeds through into end prices over the coming months. I'll leave it there for today. As always, please do subscribe on the YouTube channel. Just click and you will get the content from the team at True Potential straight onto your YouTube feed. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.